afternoon. This is 22nd of April and a new Monday when we got new power and information to be successful on the market. And today we're going to discuss a couple of very important topics. For example, here is the market, which was expected an average 5% drop, but we got a little bit more. Meanwhile, the big retaliation game, Iran decided, or at least suggesting that it's not going to retaliate anymore. But the market didn't really reacted on the way that we were expected, because obviously when the game started, the market was very negative. But now the market is less positive despite the news. And so it's a very interesting topic we need to talk about a little bit. Meanwhile, we got the earnings season, and there will be a very important week ahead of us. And we already got very important information as well. It might has to do something with the mood on the market and macroeconomics. Yeah, this is going to be big and it's coming together. So we need to take care of those data, what's coming next week especially. And very interestingly, the narratives are not very positive despite a couple of few things. And it's a very, very strange signal from the news outlets that something is going on. They might prepare to something. And need to keep an eye on that. So this is what we're going to talk about today. And let's start with the macroeconomics, which was very interesting on the previous week. The prediction was pretty much okay, pretty much good. So we got the negative effect on the ETF and the stock market. We got some roughly neutral effect on the commodity market, negative effect on the Forex market, and slightly negative on the crypto market. And what happened exactly? So first of all, on Monday, we got some information about the rising inflation data, and that was not good. So as you can see, the US core retail sales was increased from 0.6%, which is a revised data, to 1.1%, and the retail sales is decreasing from 0.9% to 0.7%. But the original data was 0.6%. And so this is a kind of neutral state right now on the US retail sales. Meanwhile, the Empire State Manufacturing Index is improving a little bit. It's still in a negative territory. As you can see, we are still underneath 0.0. That's not good. It's still a contracting area of the economy. But the previous data was minus 20.9 and the new data is minus 14.3. So some improvement, not too much. And then Tuesday, the UK was striking. And actually, what we got data, we can see clearly that we are just shrinking deeper and deeper. So what we have so far is a UK claimant count change, which was 16.8k, has been revised to 4.1k, which is a very, very huge revision. And then the new data came out at 10.9k, which is a decrease compared to the original data, but an increase compared to the revised. So in order to get a conclusion, we need to have a look on the other data as well. And the other data shows that, for example, the average earnings shows a neutral 5.6%, which means that earnings are still very high. It's a very inflationary data. And then we got the unemployment rate, which was increasing from 3.9% to 4.2%, completely negative, and the UK just going lower and lower. Meanwhile, I was highlighting the US industrial production, that we need to keep an eye on that. So the original data was 0.1%. The revision increased to 0.4%, and the new data is 0.4%. So there is an increase again this month, and it's suggesting that the US industry is accelerating. Again, a proof of inflation data, and it's not very good. Not many things happened on Wednesday. We got the UK CPI, which was a little bit declining, both the normal and the core CPI. And the EU final core and final CPI was completely neutral compared to the revised data. So technically what we got information from here, that there is no more inflation growth decline, and that might be the lowest point. All central banks are suggesting this one, so we're better believe them as usual. But on Thursday, we got US manufacturing data, especially with the Philly Fed manufacturing index, which was increased from 3.2 to 15.5. It's strengthening, so the manufacturing is accelerating a little bit, expanding, and that's again an inflationary data. I'm not surprised that the Fed is not very calm in that matter when it comes to predicting the upcoming inflation. And on Friday, we got German PPI, which was a little bit more important. That's increasing from minus 0.4% to 0.2% positive. And so, again, inflation in the European Union as well. So the conclusion is that the DXY support is expected on inflation rise, which could give some positive fundamental to the DXY. Now, the question is that how the market will react. The positive support for that is very important because if the DXY wants to fall very hard, it needs to fight with those fundamentals, and it's not an easy task for the DXY. So that's what happened last week, but this week right now is relatively important. As you can see, Monday is relatively calm and quiet in terms of the macroeconomic data, but on Tuesday, we're going to get flash manufacturing and flash services PMI numbers all over the place. So the European Union, the United Kingdom, United States is coming up. But at the same time, we're going to get new home sales and Richmond Manufacturing Index on that day, a little bit later at 4 o'clock. So we need to keep an eye on that. That means that the morning hours will be very, very active and probably aggressive on the Forex market in terms of the European currencies such as Euro and the British pound. But on the afternoon, the DXY will get the lead. And we all know what that means for the Forex market. And on Wednesday, as you see, we're going to get some important data from the US, such as core durable goods orders and durable goods orders. And Canadians are going to report the retail sales data. Meanwhile, we're going to get the Australian CPI, the yearly CPI as well. Thursday, the US advanced GDP quarterly data, then the US unemployment claims coming, and the US advanced GDP price index quarterly data, and US pending home sales. So as you can see, the United States and the DXY is very strong on this week, and you know exactly what that means. The DXY is the dominant currency, and so we need to be very, very cautious. And we're not going to get a rest on Friday because the US core PCE price index, the revised consumer sentiment and the revised inflation expectation is coming. I'm not saying that these are the big boom data, but once you see what's coming on next week, you're going to understand why it's a very good preparation. So we already have the aggressive DXY probability. And if we take a look on next week, now that's going to be something we need to pay attention because next week is what's going to happen is a very rare thing. I'm not even seeing in the last years that a strong week like this happened. So first of all, Monday will be relatively quiet. This is no surprise, but this is a perfect time to prepare for what's coming. Because what's coming on Tuesday is going to be Chinese manufacturing and non-manufacturing PMI numbers. And then we're going to get EU core CPI flash estimate and CPI flash estimate. You need to know that the market is mainly reacting for these data and not the finals. And then on the afternoon, we're going to get US employment cost index, which is going to represent how much the government and the companies are spending on employment. And the CB consumer confidence, which is expected to get higher right now. But if it's going higher, it's going to be a very interesting effect, taking the fact that right now the stock market is not very strong. And therefore, we are very interested whether an increasing CB consumer confidence will have some kind of counter effect of this negative mood on the stock market. But we got 1 week until there, so a lot gonna come. But on Wednesday, and that's very important. So on Wednesday, we're gonna get New Zealand employment change, New Zealand unemployment rate. So the one who really likes to trade the New Zealand dollar, the Kiwi, has to be very cautious on this early morning. But in the afternoon, US ADP non-farm employment change, which, yes, it means that the Friday will be non-farm payroll Friday, but the story is not ending here, because after the ADP non-farm employment change, which is good enough by its own, we're going to get US ISM manufacturing PMI. The market's supposed to be very aggressive on this data, but then JOLTS job openings. So we never got those data combined together, but it's not ending here, because then we're going to get the US ISM manufacturing prices. And after all, at the evening, we're going to get the federal funds rate. So the rate decision by the Fed is coming at 8 o'clock. And this is going to be a hell of a day. But there is two possible scenarios for that day. The first scenario is that we're not going to get a correct direction from the market, because all of the data is very important. So these are the big guns, and we got it within one day. So the market, and especially the DXY, could just moving one direction in 1 hour, then it changes the direction because the other data doesn't support the effect of the previous data. And then we're changing after an hour again because we got a new data. And then the federal funds rate will kick off on 8 o'clock in the evening. So Thursday is calming down a little bit. The only one data which is important that we're going to get is the US unemployment claims. But on Friday, and that's again something very, very special, because we used to get the non-farm payroll data on Friday, but only the non-farm payroll data on Friday. And that's not what is going to happen, because what we're going to see here is the non-farm payroll, which is a bunch of data, 3 of them: average hourly earnings, employment change, and unemployment rate. But then we're going to get the final services PMI, the ISM services PMI, and at the end of the day, most probably the US Treasury currency report. So it's, I don't know, this is a macroeconomic bloodbath. And I did not see such a macroeconomic week in the last 3 to 4 years. So it's going to be very hard. It's going to be madness. And we would say that, okay, if it is that strong, then the macroeconomics will definitely drive the market on that week. Or maybe next week, or maybe this week as well, but for sure that next week will be really crazy. I mean, extremely crazy. I just try to find the right words to describe that situation. But the story is not ending here, and that's which is more scary a little bit. So if we go out to the geopolitics, now the important development right now is the Middle East, because Iran says that technically they don't want to retaliate the Israeli attack, which is a kind of surprise on one hand, but from the other hand, that's kind of expected, because the United States was trying to play down this situation very hardly. Now, the interesting story is when we got the situation, that was a very negative effect on the market. Even the crypto market is reacting very extremely negatively when we got the Israeli attack. And so it's an important geopolitical situation, because crypto market is usually don't really care about those such things, but this time really showed attention, and that was a surprising situation. So it would be very natural if we're expecting the market is reacting very positively in the case that Iran is suggesting they're not going to retaliate in this game, because this is an ease, a relief on the mood of the nervous market. However, that didn't happen. And so we need to find the reason why that didn't happen. So we got the negative effect, and then we got the positive effect. That's supposed to be some kind of very, very negative pressure on the market. Now, the crypto market did recover some, but not as much as we expected. And or it's supposed to be after this news, because if the crypto market would be very, very positive, then we're supposed to see at least more than 61.8% a correction to the upside, but that didn't happen so far. And so we don't have to go too far to understand what actually pressurized the market right now. Because even if we take the crypto market, the stock market, AI and the AI mania was one of the biggest trigger of the previous technical bull trend anywhere. And this is about to change right now because corporate earnings are here, and I brought you very important information this week about the corporate earnings. First of all, what is happening right now? So far, the finance is mild negative instead of negative because I'm just updating my prediction for Q1. So there was one sector that I had to update. It was negative, and it's right now it's mild negative. But don't forget, a lot to come yet. So we haven't got all the finance companies reporting earnings. In fact, they are just about to kick in. And also the health is mild negative instead of a positive. But again, we haven't received all the companies. We just started. So I'm going to adjust my update. And at the end of the Q1, we're going to see how much did I miscalculate or calculated on a good way with my predictions. So the original prediction was positive for the health sector, and it's currently mild negative. We're going to see the results of that. So here we are with last week. What happened actually last week, because I told you that there's a couple of companies we need to keep an eye on. For example, Goldman Sachs reported a fairly very mild positive earnings. Charles Schwab, on the other hand, reported a mildly negative earnings. United Health is reported somewhat positive, but the Bank of America is reported somewhat negative. Morgan Stanley is somewhat positive, but Bank of New York Mellon, which I was signaling that you really need to keep an eye on that company, because if it's going down big, and it could take your Bitcoin ETF as well. So it's reported a mild negative earnings, just so you know. And the United Airlines Holdings is reported a negative earnings as well. On Wednesday, we got Arco, which reported negative. And then on Thursday, Taiwan Semiconductor Manufacturing Ltd reported negative, which is a surprise, but don't worry, I'm going to explain that. Netflix reported somewhat positive, but negative on the long run. Blackstone, mild negative. American Airlines was delayed, and Alaska Air reported negative. Before I go into Taiwan Semiconductor Manufacturing Ltd, because that's a really important earnings what we got, let me just show you what's going to happen this week. This is going to be a very, very kick-in week. And as you can see, I just explained what's going to happen from the macroeconomic perspective this week. Especially next week. So you can imagine if we're going to get companies on Tuesday like Visa, Tesla, PepsiCo, General Electric, Philip Morris, Lockheed Martin, Freeport Macron, Spotify, General Motors, and Enphase Energy. It's actually a very, very strong Tuesday. So we having a fight. Who is going to drive the market, whether it's going to be the macroeconomics with a huge power, or it's going to be the earnings with probably an even more power. So this is going to be a madness in the next 2 weeks. So I want you to be ready for that, because we don't know what's going to happen. But if it's going to be big, it's supposed to be big to the downside, not to the upside. Then on Wednesday, Meta, Qualcomm, IBM, AT&T, Boeing, General Dynamics, and Ford Motors is coming on Wednesday. And then on Thursday, we're going to get Microsoft, Google, Merck & Co., Caterpillar, and Intel, Northrop Grumman, Deutsche Bank, and American Airlines. And then on Friday, ExxonMobil, Chevron, and AbbVie. So these are the really big guns, and they are reporting within 1 week, and then the week after is going to be even worse. So I don't know whether you are prepared for that or not, but if you want to see something big on the market, this is the big what you waited for. So be very, very cautious. But before we go forward, here's an explanation. Taiwan Semiconductor Manufacturing Ltd, and I say they reported negative. So even the stock itself went down, but then the numbers didn't show that. So let me explain a little bit. So here is the positive side, which finished in the earnings positive. What people usually watching it is the year-on-year revenue growth. So how much the revenue was growing on a yearly basis. Now that number is up 16.7%, right? But take the inflation into account, okay? So inflation is a big thing. The year-on-year net income growth, so that means how much the company's net income was growing on a yearly basis, went up 8.8%. Now, this is a very positive report, as you can see. Oh my God, the company is technically increasing its revenue, its net income compared to last year this time. How positive is that? But that is not how investors are thinking about a company. And last year in Q2, Q3, and Q4, I already signaled to you that there will be a point in 2024. This could be either Q1 or Q2 when we are going to arriving to a point when the margin is not expanding anymore. And once we see this, it's going to be a bloodbath. Now let's see what's finished on the negative side within the earnings. So the year-on-year COGS, which is technically that's how much the company is spending on goods and services. So that finished on plus 25.2% year-on-year. So the company's expense on goods and services is expanded 25.2%. Now, I understand the revenue is up 16.7%, but they spending 25% more than they did last year. Now, here is the overall year-on-year expenses growth. It's increasing 18.2%. I mean, that's a lot. Revenue growth is actually down on a quarterly basis by minus 5.3%. The quarterly basis net income growth, so how much it's growing actually, it's not growing, it's declining 5.5%. So the company has started to reduce the margin. And this is a big problem. Let me just explain you why. Because remember for that, because if you don't, I'll show you again what's happening when the revenue is declining, the cost is growing. What happens with the investors? They are on strong sell. If the company cut the costs, so it's firing people, downgrade its expense, then maybe they are holding or selling. You see that? Now you understand why back at the time I made this graph and tried to show you what is going to happen with the companies. Nobody was asking after that, but guys, if you pay attention, that's exactly what is happening right now with the Taiwan Semiconductor Manufacturing Ltd. Now, if it's happening with them, it's going to happen with NVIDIA as well. And this is the reason why the NVIDIA stock went down big, because the Taiwan Semiconductor Manufacturing Ltd is the one that's producing the chips for the NVIDIA. So pay attention, big times are here. They're not ahead, they are here. And let me just show you that the net income in the billions in terms of the Taiwan Semiconductor Manufacturing Ltd. In Q3, it was 9 billion, average about 9 billion. And then Q4 went up in 2022, 9.5 billion. And then Q1 23 went down, Q2 even lower, Q3 went up again, Q4 went up again, but Q1 24 is going down compared to Q4. And, when you are an investor and asking questions that, is my company really doing well? Is my company growing? Is expanding? Is the margin is expanding? Is the company actually pays better than maybe the bond market? And then you compare the valuation of the company in 2022. We got the same valuation in Q1 2024. The market will not let this happen because the company is not worth the money it was worth in 2022, which was overhyped anyway, so it was not worth of the money. The price must come down. And that's exactly what we saw. And now we got the answer for the question why the market is not recovering after we get the news by Iran that they will not retaliate. The reason why the market did not recover, because there was two main reasons why prices went down. I mean, there was more reason why prices went down, but two main reasons. One is the geopolitics, which I was signaling to you that you need to pay attention. And the other one is the possible bad result of the earnings. Now we got both. So even if one is improving, because you will see on the points that one is improving, the other one is actually not improving at all. In fact, it suggests more trouble ahead of us. So now you understand how the market works and why the market is not really recovering back to the levels where we've been. And that's a really important one. Let me just show you an example of a result of Taiwan Semiconductor Manufacturing Ltd. So let's take a company which is ASML. How ASML was finished its revenue. Now the year-on-year operating expenses on goods and services, the COGS growth is minus 22.1%. That's a pretty good number because they actually in decline in terms of expenses. So you would say that, okay, they're spending less, so this is a very good news. But when we see the negative side, the revenue growth, the year-on-year, minus 21.5%, this is a drastic drop. Year-on-year expenses growth, plus 5.2%. Year-on-year net income growth is minus 37.4%. Quarter-to-quarter revenue growth, minus 27.4%. Quarter-on-quarter net income growth, minus 40.2%. The company is literally dying. And this is a big company within the sector. So that's the result. And that's what the market is really afraid of. Not because probably, large companies like Nvidia or Google, Microsoft will have these numbers. They probably don't. Maybe Nvidia, it really turns out that how much did they cheat with the numbers last year. But it's still a very negative environment. So when I told you a week ago that the AI mania is officially over, it was over last week, as I said. And that's finished, that's done. So if that was your hype, that was the something you was riding on the market, you need to take into account that it's over. You're not going to get this this fundamental support anymore. So what else you could get to support a bull trend on the market? Not too much. So pay attention for that. Pay attention for the earnings. And this is the reason why I'm showing you. This is the reason why I'm working and try to remind you what kind of earnings are ahead of us. And those are the big tech companies. And they are not feeling good at all. Now, how or what kind of response we got from the news outlets? And this is another important topic, by the way, because if we take a look on that, the bubble concern on the ETF and index and stock market is even stronger now. So the news are focusing on the bubble concern instead of the euphoria. The euphoria is over. That's ended. That's it. It's finished. So when I said the possibilities, people criticized me that I am too negative. But now the whole world is worrying about possible rate hikes. I mean, rate hikes. It's just a possibility. But now suddenly everybody talks about. Meanwhile, we knew exactly that we're going to get to this time if inflation is not going to come down. And the inflation did not come down enough. So that's a problem. And Iran is stepping back one. But the narrative doesn't change. So why is that? Now, the reason why, because news outlets knew exactly that the game is over, the AI game is over, and now they cannot feed any more positive news. So they need to start shifting through to the negative side because there's nothing else to do. Okay, so that's the ETF index and the stock market news narratives right now. What about the commodities? Well, the bullish narratives on demand for industrial metals, especially for copper, is increasing. So that's a very good news. I mean, the reason why we got the demand is less good news because most of them is military preparation. Then the US government is downplaying the oil prices we saw on the charts. Meanwhile, the market is staying still nervous. I mean, the prices went down a little bit. I'm going to show you the chart today, but the market is still very nervous. It's not reacting to the U.S. government on the way it's supposed to be, and so that's interesting and staying relatively positive. So what's on the forex market? Again, I have raised attention on potential bank balance sheet bubble pop, and people were laughing on that information. But now big banks are in panic mode about potential balance sheet crash. Wow. Didn't we just talk about that 6 months ago? That if we are going forward on that direction, this is what's going to happen? Now, this is what's happening right now. High US inflation concerns could cause DXY strength. We all know this, but now the news also talking about. So the strong dollar possibility is not a possibility anymore. It's a fact. And the market is reacting. Banks are reacting very strongly. And there's no change so far on the crypto market, which is weird because we got the BTC halving and we got a lot of things. Negative reaction on Middle East, then a less positive reaction for everything else. That's kind of scary. Crypto market news narrative supposed to be positive by now, very positive, and it's not. And pay attention for that because mainly most of the times this is what's driving this market. And so being neutral on the crypto market news-wise, not very lucky thing. So I understand that technicals and we might be going up, but not everything's shining as much as gold. Just remember for that. So this is what the news is giving to us and what kind of sentiment we see right now. Well, that's interesting. So on the ETF and the stock market, the finance sector is, well, extremely bad. And then the health sector is surprisingly bad, but probably this is a profit taking because it's supposed to be a safe haven and in some cases. And now we're just turning into that direction. So possible improvement on health sector is expected somewhat. The tech sector is extremely bad. Extremely bad. Retail sector is suffering from profit taking. Consumer services is suffering from profit taking, and the car industry is very disappointed. The whole market is very disappointed right now, and so we see that very extremely negative reaction. Transportation is very bad, and the energy sector is suffering from profit taking right now, but it's still somewhat positive. So the conclusion is that there is no sector, not one on this list, which would be very extremely positive. Even the very positive energy sector is declining a little bit. But there is one sector which is not in this list, which is the utilities. Now, that was the only sector last week that managed to gain, which signals that the inflation fear is huge on the market and the sentiment is reacting for that. So what do we got so far? Negative geopolitics, which improved just a little bit, but the market forgot to reacting for that. All of them. Then we got earnings season, and we definitely got a negative reaction at the beginning because we definitely get very, very negative details. And now we have an inflation fear as well, because we see how the sentiment is actually diversifying itself within the market sectors, and that's what this data showing to us. So 3 very important and overall negative power on the market is affecting negatively the whole market, the ETF and the stock market together. I'm not saying this is the end of the world, but that's something fundamental which is really necessary to turn around a technical trend. Now going forward, the commodity market is interesting. So the essential food sector is a little bit improving compared to last week. The non-essential food is only, what we see here is only a very small backdrop. The energy market experiences no changes right now. Precious metals are neutral, but the pressure is remaining positive. We will see. But today, for example, we already got some correction, and I explained that to you, we need that correction anyway. Now, the industrial metals are overall positive, and now we also have news about possible industrial demand. So if we get profit taking, that's fine, but it will be really interesting how deep a possible correction will be due to profit taking, and whether we are bouncing back from a certain level or not. We're going to see that on the technical charts, of what kind of options we have. Live stocks are relatively positive, signs of inflation rise again, but not much improvement right now in terms of the sentiment. And if we go for the Forex market, that's again interesting. Not much move, as you can see overall, but there is a reason why. Because I just told you what kind of macroeconomic data we're going to get this week and especially next week. So the market probably prepares for that. But overall, the DXY is neutral in positive territory. The EXY is neutral in negative territory. The JXY is neutral in extremely negative territory. The BXY is very negative. The ZXY is mild negative in mild negative territory. The CXY is mild positive in negative territory. The SXY is neutral in negative territory, and the AXY is mild negative in negative territory. So my conclusion out from this is that the overall mood is negative, but let me highlight that the amount of bank mood decline is very small, so the market is preparing. And it's very important. So the Forex market mainly will react for the macroeconomic sector. Meanwhile, the ETF and the index in the stock market will react both to the macroeconomic sector and the earnings. And there is the geopolitics still, because just because we have some improvement, that doesn't mean that the war is gone. It's not gone. And it's very easy to spark another, collusion. So the crypto market shows a very, very small improvement, which that's what I was talking about, that it's not good enough after easing the fact why the market went down. So we got the improvement, but we don't see in the prices actually. And so in some cases, it is very negative. So yeah, that's what we have right now. Now, this is the interesting part of the conclusion, because we're going to see the technicals on the charts, which I'm going to show you to the pro members. But let's go through on the market sectors first. Here is the ETF and the index market. As you can see, I explained that to you, that some ease on the macroeconomic side ahead of this week from -13 to -12. Some ease in geopolitics. I explained that to you why, so you're supposed to understand that. Some ease in corporate earnings, but that's because we haven't got all the details just yet. And there are some companies that showing also positive earnings, as I showed you. So this week is very strong in the tech sector. This number could come back very easily, even lower. So it's -6 right now, and the maximum point we can get is -10. So yeah, I'm going to follow this very closely. Now, the market news and events are declining from 2 to... staying at -2, sorry. I missed that one point. It's relatively negative. It's not improving. That's what I was talking to you, that we don't improve back in the market news narrative. So interesting days ahead. Market sentiment is declining from -3 to -5. So the previous -3 is even exceeded. Again, with a new low below, and the technicals are unchanged at -3. So the overall point is showing us a new point, which is pushing back a little bit from -38 to -37, which suggesting to me that the overall mood on the market is remaining extremely negative, but we should expect some bounce back. So despite everything we saw so far, we probably going to see some bounce back, some correction to the upside, and then we're going to see a second wave to the downside. Now, the question is, how deep is that second wave will be? So that's my conclusion from the overall point, but we want to see on the technical charts what that means exactly. But the main risk on this market sector is actually still geopolitics, that it's going to spiral to sentiment and technicals, which we already experienced. So that's not only a risk, it's an ongoing process. But at the same time, we got earnings season plus inflation plus rate questions, which are going to be solved next week. This is going to be a very volatile market sector in the next 2 weeks, that's for sure. Now let's see the commodity market. Oh no, before we do that, let's see the stock market, because that too is related to each other. So we haven't seen any increase in the macroeconomics point, which is interesting compared to the ETF market is remaining minus 12. But the geopolitics, yes. The corporate earnings, yes, it's increasing a little bit, but same situation. But I told you the maximum point we can get is minus 15, and we are at minus 12. So the overall is very negative, don't get mistake, but we haven't received all the earnings, so obviously. And it's very hard to measure because it's including the whole market, actually, stock market. And so if you see, the market news and events are remaining at minus 2. That's very similar to the ETF market. The market sentiment and psychology is declining now, not with 1 point, but with 2 points. So it's going down from minus 6 to minus 8. Very negative, extremely negative. And this is why I'm expecting some pullback, because when the market is accelerating to the downside this much, it usually makes a pullback. So technicals are at minus 5, is declining compared to the previous minus 4. And this is why the new number, the overall number, is minus 49, which is lower than the previous minus 46. So that's the difference between the stock market and the index market and the ETF market. So as you can see, the market is probably trying to react in a positive way on the ETF market with a bounce back, but the stock market is remaining very, very, very negative. And so this is a proof that if the indexes are bouncing back a little bit, it's not going to be a long-lived movement to the upside, because stocks are still pushing them to the downside. So at some point in the middle of the correction to the upside, you're going to let it go and shorts are coming back. So that's my conclusion from that point right now. Commodity market is interesting because the macroeconomics is improving from 13 to 14 points, not too bad, but the geopolitics is declining from 18 to 17. Now the reason why, because when you got some improvement in terms of the geopolitical issues, that means that at least this is a chance to ease deliveries, the supply chain itself, probably price declines expected, and that's why we got the point down. That's an expectation so far. We haven't got any proof, and this is why it's remaining very extremely positive overall. So market news and events are going up because they're receiving just very positive news. So it's coming up from 4 to 5, very positive. Market sentiment is improving from 7 to 8, very positive. Glad to see this. And also the technicals are improving from 4 to 5. So the overall point is actually improving from 46 to 49. As you can see, nice comeback to the top, almost to the top. So I'm glad to see this. It's a very good news for the commodity market. We started to take care of the commodity market since quite a few months now. And we still need to focus on, because as you can see, the overall point is supporting what we are doing there. But we got to be careful because we need to choose the market sector on the right way. So which one we are riding and which way we are not. Okay, so moving forward, Forex market, the macroeconomics is declining from minus 14 to minus 15. And then the geopolitics is up from minus 4 to minus 3. Market events and news are down from minus 4 to minus 5. Market sentiment and psychology is down from minus 5 to minus 6, and the technicals are down from minus 7 to minus 8. So overall, we got a point which is down from minus 34 to minus 37. It's declining, which suggests more DXY to the upside is about to come. It will obviously depend on the data we're going to get this week and next week, but you see that how the market is preparing. So if we get the DXY strengthening in the next 2 weeks, that's how the market will react. Okay, very important. But the overall market is negative, so need to pay attention for that. And then here is the crypto market. There is no improvement in macroeconomics at all. There's a remaining at minus 13. No improvement, little improvement on geopolitics. It's coming back up to from 2 to 3. But the market news and events is not improving as much as it expected. It's coming up from 2 to 3, but, that's a very mild improvement. Market sentiment and psychology is coming up from 7 to 8, but, it's remaining within this downtrend. It's not very healthy at the moment. And the technicals are actually declining from 5 to 4. This is a wow. So I thought at least we're going to get some very mild improvement on the technical charts. That number suggests that there is something we need to pay attention for, definitely. So yeah, the overall point is coming up from 3 to 5. And this is an increase, but it's not as much as we expected. And I think this is a red alert that we need to pay attention. We need to be very extremely cautious on the crypto market, especially for long-term plans. So now that you understand what is happening exactly on the market, I think this information package was more than enough to you. But if you have any question, of course, waiting for those questions on the Pro Discord server. But for now, let's see the charts for the Pro members. And let me just change my screen share.